There's definitely nothing that says it's going to go to 12,000. Hey, we don't even know if it's going to go to 20. I mean, we think it will, but maybe it doesn't. So I mean, everyone should have a plan, right? The most important thing is say to yourself, okay, well, where do I see? I can hear you, so I'm going to assume everyone can hear us. But I think number one is, and listen, I'm not as familiar with the crypto markets. I'm more of a chart guy. I've gotten into crypto, but like I've always been perturbed by like why do we need so many stable coins? Like why can't we all use Tether, or why can't and maybe like a couple are okay, but it seems like there's just too many coming out. And the bottom line
Yeah.
is like there are going to be bigger players like hedge funds and that have these algorithms that can figure out how far they have to push something or how much money is backing something before they can break it, right? So
Yeah.
so if Luna has 3 billion in Bitcoin, okay, well, if they spend 3 billion or whatever, can they break it and then make 10 billion from that? So I think that that's a really kind of crazy scenario where we're seeing it play out before our eyes. And I also think that it definitely you need regulation. You need some sort of, and I know regulation is like the scary word in the industry, but the bottom line is this is not a good thing for all of crypto, right? You can't have these kind of shady things going on where something is supposed to be pegged to the dollar, and before you know it, it's trading at 70 cents per dollar, where people are trusting, right? And
Yeah.
and we still have an issue in crypto. You still have an issue with a lot of people in the world not trusting it, including older Americans, including pension funds that you want ultimately to invest. So I think the bottom line is that hopefully this gets worked out and figured out, but it's just one more reminder that it's the Wild West out there, and we got to be careful. And I've been playing around with Terra Luna, but I've kept it to a small percentage of the portfolio. And luckily, I'm down on it right now, no doubt about it. I thought we would have gotten a technical bounce already. I'm still optimistic it can still get some sort of bounce, but again, it's all about position size, position size, position size. You can try any support level or short any resistance level, but monitor that position size. Right. It's all based on chart levels. And this is one of the things is that, if I do 1,000 trades, I really try to turn off my brain about anything else, like any news I'm hearing, like is CNBC talking about Apple, it doesn't matter if it's crypto or stocks or anything. I turn my brain off in that respect. Now, 9 out of 10, 99 out of 100 times that works, because usually when you're listening to the media or you're listening to other things, it makes you do the wrong thing at the wrong time. But there's always an occasion where you can get yourself in trouble because there is that black swan event. Something crazy has happened. So again, you have to I always go into trades kind of saying, okay, if this goes wrong, how am I going to do it? How am I going to minimize losses? And really, it comes down to position size. Like I'd much rather, this is one of the things I've learned through many, many years of trading, and unfortunately taking many losses in my early career, is that I'd much rather go into a trade being cautious and putting a limited amount of capital in, as opposed to going all in and then potentially losing my shirt. Because it's easy to come back from a 5% loss in your portfolio or a 3%. But if you lose 50 or 100%, I mean, it takes a lot of savings and replenishing that account to come back from that. And at this stage of my career, I'm not okay with that anymore. I got to provide for my family. I got bills to pay, as do a lot of people. So I always go in kind of thinking this might be a loss. So how am I going to start small? And then ultimately that's helped me with Terra Luna here to protect where it's not a very big position. So it's like, okay, it goes against me. I'm not going to add to it. I'm not going to do anything else at this point. I'll let it play out and see where it is in a week from now or so. That I do think that the fact, so Terra Luna has made a lower low. We've seen it go down to like $14 now or so. I think it's right now at 17. But the fact that Bitcoin is still holding 30,000, which was the low yesterday, I think that is a short term. If there's one small glimmer of hope for the crypto market, it's that a lot of these coins are still holding their lows from yesterday, even though Terra Luna has broken down. And I think that is worth mentioning. So as everyone knows, I mean, for the longest time I've been talking, and it's really seemed like I was beating a dead horse here, because it was staying within this consolidation pattern for so long. But when you have a move like this and then you stay in this tight range, it's case in point, go to any textbook on technical analysis, and it's a bearish pattern. It's a bear flag, bear consolidation. And ultimately it took a while for it to break down, about 3 months, but it certainly did do that. It went exactly where it should have gone. as it becomes more traded and there's more volume and more participants, it's going to behave more like it should, which is following the chart stats, right? So yeah, you're 100% right. And I mean, you know, what was amazing about this, it even shocked me. I mean, I was literally able to short up here and like buy it. You know, you could just play it back and forth for the bounces and the pullbacks until finally it did break down. And then look at the beauty of that, how it just goes to right at that even number, which marks basically the lows from 2021. And that's where you get the technical bounce. So really, case in point, that's exactly what you would expect. You have the classic M top here, almost a double top, but it took out the highs by just a shade. So I think for me, it's at this point expecting a short-term bounce on Bitcoin. I don't know if it's going to retrace to the scene of the crime, which would be this white trend line here, which is around 38,000 or so, or maybe it gets a smaller bounce. But there's levels to play on bounces. But I personally don't think that this is over by any stretch. You still have to see quite a bit more downside. I was doing a calculation here that's kind of fun to talk about. You can kind of see it on the chart, right? So there's a couple different calculations in technical analysis. One is called the measured move. And to do a measured move, you basically take the initial move. So from the high here of 69,000 to the low of 33,000, and then see the consolidation is like that middle ground where it's the marathon runners basically taking a break. And then what you do is you do another 36,000. So from 48,000, you drop the same distance, which is 36,000. And scary enough, but this is kind of my worst case scenario, you potentially could drop down to about 12,000 on Bitcoin. Interestingly enough, if you think about past bear cycles, Bitcoin has always corrected 80 to 85%. Well, guess what 80 to 85% is of the 69,000 high, right around 12,000. So again, no guarantees it gets here. I'm going to start accumulating bigger positions probably when we get close to 20, and then I'll just continue to add all the way down. But it just kind of gives us a pause, and it makes us realize that, hey, listen, you know, it goes up much more than you think it can initially, and then it can go down much more as well. There'll be a certain price and a certain maturity in Bitcoin where I do believe that at that point, it's going to start to stabilize. It's going to become more of that safety play like a gold has been for centuries. You know, and at that point, I do want to just tuck some away. It's hard to hodl something when you think it's going to go down. It's one of those things. And I think it's important for everyone listening and watching is like, yes, I don't want us to come across like perma bears, right? It's you and I both know that there'll be a price where we buy it and then there's a price where we short it. We're just trading it because that's how we make more money and we feel safer doing it for our families. You know, there's definitely nothing that says it's going to go to 12,000. Hey, we don't even know if it's going to go to 20. I mean, we think it will, but maybe it doesn't. So I mean, everyone should have a plan, right? The most important thing is to say to yourself, okay, well, where do I see it in 10 years, as if that's your longer term horizon? And then how am I going to leg into it if it does do that, right? So for me, you know, I might think it's going to sub 20,000, but I'm going to still start accumulating above 20, just above 20, but I'm going to just buy little small positions just so I have some skin in the game in case I'm wrong, right? And I'll probably do a very structured thing, not emotional, no emotion, right? So maybe I'll put up my first order at like 20,500, then the next one 3,000 below that, then 3,000 below that, and always just base it on that, not be getting emotional and say, oh my goodness, I got to get all in or all out, but just be structured and have that plan, right? And the idea is that I do believe that Bitcoin will eventually be $500,000 or $1 million. And so I do want to have some of my assets in it. It's just, again, waiting to try to get it lower in this deleveraging event. And I think it's also important to remember that Bitcoin has never been through a tightening cycle or a high inflation cycle, right? Since 2009, interest rates have really never been above 3%. The 10-year now just came back under, but we're seeing the Fed tighten by 50 basis points. It's a whole new ball game. And so to think that there's not going to be at least an 80% correction when that 80% correction happened even when the Fed was easy money policy. Man. Now they're doing the opposite. So it's like, it is a scary time. There's no doubt about it. You know what they do? And this drives me insane. And a lot of people don't realize it, but instead of raising the price on like on like ice cream or on a cereal box, what they do is they don't raise the price. They shrink the box, right? So you think in your head, you're like, oh, I paid like $2.99 for that last year, but literally you're getting like 75 or 25% less in the box. So it's actually like they did raise the price. But yeah, they do that all the time. Look at like, I still remember back in the day, like a thing of ice cream was like so much bigger. Now it's like I could eat that thing in like 2 spoonfuls. It's happening everywhere. And then what's really tricky about that is like, if you're, I mean, you know, luckily I'm in a pretty good position. You're in a good position financially, but I mean, there's a lot of Americans that are feeding a family of 3 or 4 kids, right? And they're not going to be like, oh, well, the price went up, so I'm going to eat less. I mean, they're kids, they're growing, right? And it's tough right now. The inflation side is really bad, and you know, I do hope that they figure out how to get it under control fast, because I don't think the prices are going to ever go really down, but you just don't want them to keep expanding at this rate this quickly, because that's really bad. I think that you know, it's important to remember that you can have a recession or a depression with inflation. The scariest word to economists and to really the public is stagflation, right? So usually when you have inflation, it's coupled with economic growth, with higher wages. So if the price of an apple is up 10 cents, well, everyone's making 10 cents more so they can pay for that apple. It doesn't really hurt them. The worst thing is when you get a recession where people are making less or losing jobs and prices are still going up. So again, I think that's what I'm starting to be concerned about later this year into 2023. The Fed is trying to get inflation under control. I honestly don't think they will fully. I think inflation will come down to like 5% maybe per year. And then I think it's going to be sticky. And the main reason I think it's going to be sticky there is because, you know, wages have gone up for almost everyone, right? Having to pay more wages to get that person to take that job because there's a lot of competition. The problem with that is that they can't pass, like if you're going to pay someone 50,000 instead of, or you're going to pay them 60 instead of 50, you can't pass 10,000 right along in your widget price. So what you do is you say, okay, well, this year I'm going to raise widgets by 10%, next year 10%, next year 10%, and you kind of pass it along over time. Otherwise, if you don't pass along the inflationary costs, you go out of business, right? I mean, you can't make money. So that's my concern. And then I think, again, the Fed is going to be put in a position where hiking rates, you're already seeing the stock market decline. That's doing away with the wealth effect, which was one of the reasons inflation got so crazy. And then crypto's done the same thing. So you're going to have people that feel poorer because their 401ks are down 40%, their investment accounts are down 40%, and they're not going to want to spend money, and they're not going to feel like that. So it's a crazy time right now. And you know, it's one of those times where I personally, I do like gold. I personally think oil will come down. I think you're on the opposite side. You're looking for oil to move up.